Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Hewlett Packard Enterprise, or HPE. You might think a report about printer companies and stock options sounds about as exciting as watching paint dry, but stick around. We're going to decode what this document really means for the company and its future. This report is a snapshot of what happened at HPE's annual meeting in April of 2025. Stockholders, that is, the people who own pieces of the company, got together and voted on some important stuff. We're going to break down what those votes were and what they mean. One of the key items in this report involves changes to HPE's stock incentive plan, which they call the SIP plan, and their employee share purchase plan, which they call the ESP plan. Think of the stock incentive plan as a way for HPE to reward its employees, especially executives, with company stock. It's like a bonus, but instead of cash, they get shares in the company. The idea is to motivate them to work harder and make the company more successful, because if the company does well, their stock is worth more. HPE wanted to increase the number of shares available under this plan by 22 million shares. The employee share purchase plan, on the other hand, allows employees to buy company stock at a discounted price. It's a way for HPE to encourage employees to become owners of the company. HPE wanted to extend this plan for another 10 years. Both of these changes needed the approval of the stockholders, so they were put to a vote at the annual meeting. The board of directors already approved the changes, but the stockholders had the final say. If you want to dig deeper into the details of these plans, you can check out HPE's proxy statement from February. It's basically a document that explains all the proposals that stockholders will be voting on at the annual meeting. You can find more information about the stock incentive plan on pages 57 to 65 and about the employee share purchase plan on pages 66 to 69. Now, let's get to the main event, the voting results. At the annual meeting in April, stockholders voted on 6 different proposals. Let's see how those votes went down. First up, Proposal 1, electing directors to the board. These are the people who oversee the company's strategy and make big decisions. Stockholders voted on 12 different individuals, including Pamela Carter, Frank D'Amelio, Regina Dugan, and the CEO. Antonio Neri, the CEO, received roughly 949 million votes for, compared to only about 43 million against. Antonio Neri, the CEO, received roughly 900 and Neri. All 12 were elected by a pretty wide margin, meaning most stockholders were happy with the people running the show. For example, Pamela Carter got about 949 million votes for, compared to only about 43 million against. Antonio Neri, the CEO, received roughly 989 million votes for, compared to only about 43 million against. Antonio Neri, the CEO, received roughly 900 Neri, the CEO received roughly 900 Neri, the CEO received roughly 989 million votes for him. Next, Proposal 2, ratifying the appointment of Ernst & Young LL as the company's independent auditor. Basically, HPE hires an outside accounting firm to check their books and make sure everything is on the up and up. Stockholders overwhelmingly approved Ernst & Young with over 1.1 billion votes in favor. This means investors are confident in the way HPE manages its accounts. Proposal 3 was about approving Amendment No. 4, that is change number 4 to the Hewlett Packard Enterprise Company 2021 Stock Incentive Plan. As we discussed, this plan is how HPE motivates employees with stock. This proposal passed, but not as overwhelmingly as the others. It was approved, but a significant number of votes were against it, almost 300 million. This might signal that some stockholders have concerns about how much stock is being given to employees, or perhaps who is getting it. Proposal 4, approving Amendment No. 1 to the Hewlett Packard Enterprise Company 2015 Employee Stock Purchase Plan. This is the plan that allows employees to buy HPE stock at a discount. This proposal also passed easily, indicating strong support for employee ownership. Proposal 5 was an advisory vote on executive compensation. This is where stockholders get to voice their opinion on how much the top executives are being paid. The vote is non-binding, meaning the company doesn't have to listen to it, but it's a good way for stockholders to send a message. This proposal passed with a majority of votes, but over 100 million votes were against it. This suggests there might be some discontent among stockholders about executive pay levels. Perhaps they think the executives are making too much money compared to the company's performance. Finally, Proposal 6, a stockholder proposal on transparency in lobbying. This proposal asked HPE to be more open about its lobbying activities, that is, its efforts to influence government policy. This proposal did not pass. The majority of stockholders voted against it. This could mean that stockholders are comfortable with HPE's current level of transparency, or they simply don't see lobbying as a major issue. This report also includes exhibits, mainly the actual text of the amendments to the stock incentive plan and the employee share purchase plan. These are the legal documents that spell out the details of the changes. If you're really interested in the fine print, you can check them out. Vix, now let's step back and look at the bigger picture. What does all of this mean for HPE? First, the election of directors and the ratification of the auditor suggest that stockholders are generally happy with the current management and oversight of the company. They're giving the thumbs up to the people in charge and the way the books are being kept. Second, the approval of the stock incentive plan and the employee share purchase plan shows that stockholders support using stock as a way to motivate employees and encourage ownership. However, the significant number of votes against the stock incentive plan suggests that there might be some concerns about the amount of stock being given out, or perhaps who is getting it. Third, the advisory vote on executive compensation reveals some potential dissatisfaction with executive pay levels. While the proposal passed, the significant number of votes against it sends a message to the company that some stockholders think the executives are being overpaid. Finally, the failure of the transparency in lobbying proposal indicates that stockholders are either comfortable with HPE's current level of transparency or don't see lobbying as a major issue. Overall, this report paints a picture of a company that is generally well regarded by its stockholders. However, there are some potential areas of concern, particularly regarding executive compensation and the stock incentive plan. These are issues that HPE's management will need to address in order to maintain the support of its stockholders. So, what's my take? HPE seems to be sailing in a pretty steady direction. The leadership has the green light from shareholders and employees are incentivized to own a piece of the pie. But those rumblings about executive pay and stock options, those could turn into bigger storms if not handled carefully. It's like the shareholders are saying, we trust you, but keep an eye on the spending. Ultimately, HPE's future depends on balancing growth and shareholder value, while keeping those executive perks in check. In today's video, we cover its Corp for US businesses, so thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more insights into the world of corporate filings.